Hello, hello, hello. Happy Thursday. How's everyone doing today? Good morning, Patrick. Good morning, Mark. Good morning, Royal Palms. Good morning, Sterling. What else? Good morning, Jacob. Good morning, Zello. I love to say that. Good morning, David. Good morning, Yogi. Good morning, Ted. Good morning, Odie Green. Good morning, Balaji. Good morning, Ted. How is everyone doing this fine CPI Monday? CPI or CPI Monday, CPI Thursdays. I'm already jumping ahead to Monday. Maybe I want next week's just so we can unwind a bit. All right. Wait for some more people to filter in. Good morning, Patrick and Rusty over on Rumble, and people in the background on Rumble. Type into the chat. So, what do we got going on? What do we have going on here? We have the numbers came out this morning. Sterling put them in. Thank you very much. I got to dive a little more into it. So something seems slightly off where we were. Core inflation rate coming in at 2.6. Now I like the drop, but geez, year over year down from 3 to 2.6. In we're missing a month, and it's already coming out that they made some interesting assumptions in this report because they didn't have all the data. So we'll have to see how this plays out. So I'm sort of taking it with a slight grain of salt. But if you're looking just at the core numbers, it would be good news. It would be good news, but we shall see once it's all digested. Good morning, Tony. Hello, Charles. Good morning, Eric. But we came down to key levels yesterday, and levels I told you I was looking at yesterday. We got the sell off. So again, no percent beat buy. We broke down below some key levels and then hit the targets. Hit the targets yesterday afternoon. Now bouncing strongly. We'll look at those. We'll look at those. But we also had initial jobless claims coming in at 224, down from 237. Continuing jobless claims coming down in at 1897, up from 1830, below 1930. So jobless claims are mixed in there. We have the Philly Fed, business conditions dropping, employment index jumping up a bit, new orders bouncing back from minus 8.6, prices paid, huge drop in prices paid from the Philly Fed. So that's what we have. We have the Kansas City Fed and Composite Manufacturing Index coming up and some auctions, but it's quiet for the rest of the day. And then tomorrow morning, we got consumer sentiment is the big one. We have consumer sentiment for December, final numbers. What else? It's buy it all. Well, buy it all except for Accenture. Accenture. Well, don't want to buy Accenture. Rotation out of consumer defensive. Buy it all. Yay, buy it all. Buy at least all the mega caps, and the world is saved from a more benign CPI print. So buy the mega caps and all the semis. Groups. Let's just refresh this. Consumer defensive down and energy down. Everything else is up with technology, consumer cyclical, and comm services leading the way. We now have let me refresh this. This is 71% for a pause in January. So dropping slightly back in fear mode after yesterday's sell off, but this will bounce out of that again. Schiller PE back below 40. Dirt cheap market 39.59. Buy it all. I'm just going to keep saying buy it all. Micron, decent results yesterday, gapping up today. Accenture reported this morning. That's why they are down. Did not look at CarMax. I was focused on the CPI numbers. We got Nike, FedEx after the close. So especially FedEx is going to be interesting. FedEx is going to be interesting. Good morning, Heinrich. Tomorrow, Carnival Cruise Lines, ConAgra. ConAgra, again, one I'm looking for a longer term, something longer term in. All right, there's your gold up there right now in the March contract. Hold on one second. Just need to respond to something real quick. Sorry about that. Uh, my target yesterday was the 67.85 on any shorts, and we dipped below that slightly and now rebounding. We have the first cross rotation zone overhead. So what am I looking for on the March contract again? We'll switch back to the continuous in a bit, but right now I'm watching the top of the 4-hour rotation zone and the key breakdown zone from yesterday, the 68.43 area to about 68.46. If the bounce continues above there, then I'm looking at 68.64, 68.65 level today. Okay, so we came down, remember, between the 50 and the 62.5 harmonic on the March contract, which is a major key buy area, or conversely on any rally, a key sell area. So I'm more shifted to neutral mode. Still can do buys. There's a little momentum this morning. But the next key area above 68.64 is 68.79 and then 69.06 on a closing basis. That's what's going to be key. Don't have to wait till then to do buys because why? Longer term, we're still in the weekly rotation zone. But on the shorter term, it's still got some, this is the reaction to CPI, but we still got some now overhead resistance to get through. So that's where, and here was the CPI print. We were slowly grinding higher coming into it, and then the kaboom. Really pay attention to the 68.35 area going into the open. The NASDAQ coming, what was the target we listed yesterday? I think everybody remembers 24,892 area. We got down to 24,887 and closing just above that. Did we close below the 62.5, shifting the probabilities? No, we did not. So we came down between the 50 and the 62.5, still closed above the 62.5, so no shift in probabilities. And now the bounce with the CPI numbers out of oversold conditions with daily cycles at the bottom. Key target areas 25,395 to 25,400. Above there, 25,512, 25,665. I still really want to see how the market reacts because we've been getting consistent selling pressure after the open. So we have the pre-market buying right now. I want to see if that sustains or we start getting selling pressure before we get into complete rah-rah mode. All right. Into the clear path move. Here's your CPI breakout. The end of the full clear path move, by the way, is just in front of this 50%. This is just in front of 25,512. The technical target for end of a clear path move is 25,493 roughly. So I'm looking 25,493 to 25,512 is my first key target area should the bounce follow through. Another key thing to watch onto the open on the March NASDAQ contract, 25,200 on any pullback. That's going to be key on any pullback. You're welcome, Mark. Just trying to relay exactly what I'm looking at so people can maybe learn something or at least add to what they're looking at. You don't have to do things the way I do. I'm just trying to provide what I've looked at. Boy, how long have I been doing this? Since 92. How many years is that now? 30, 33? Oh, I'm an old person. All right. Not as strong a bounce in the Dow so far. The Dow's the weakest of the bounce. Right now, I'm keeping an eye still above 48,370 roughly. Target for me, I'm bringing this one down. The key target for me is 48,710 on a continued rally, the first key target. Russell, holding the rotation. Remember, we rolled on the Russell. We got to switch to that March, which was below the rotation zone. The continuous is just above the rotation zone. Right now, with this on the Russell, On the Russell, if we can take out 25.50, the target's 25.65, then 25.80 shifts the probabilities. Good morning. What is this? Young S Young. What do I call you? Youngest. I can't even say that. I can see YUNG. Estinate. Young Estinate. Good morning from the Netherlands. Well, thank you for tuning in. Thank you. I haven't been to the Netherlands in years. All right. If we did reverse and take out yesterday's lows in the Russell, 2488 to 2492 is key support. I did not go over key levels also. If we did take out, for some reason, if we reversed strongly and took out the pre-market low or overnight lows, 67.35 on the March contract, and the NASDAQ, this is a major support, this 24,892 area. If we took that out and closed below it, 24,646. Just wanted to recap that. The VIX, not as big a pullback yet. Not as big a pullback yet, but key of I'm watching is about 1645, or if we start reversing back above 1725, that area. The DAX pulling back, actually technical close below the rotation zone, still holding this key support level. There isn't a great daily signal in there, and I was watching to see if we formed a more significant bottoming signal. We have not. There was just a minor 4-hour %B buy overnight in the DAX. The yields dropping. We do have, I'm keeping an eye on this now, a daily double top pattern. If this were to close below 4.114, then that would trigger, and I'd start watching for the shorter term pullback in that. The 30-year yields holding a little stronger. Would not be surprised, though, to see a pullback closer to the bottom of the rotation zone. Crude, again, coming up with the rotation zone. Going to be looking for a stronger bottoming pattern coming up. There is not one yet. I'm watching for a retracement right now in crude. What are we holding? We're holding the 62.5. If we turn around and close on a 4-hour basis back below that, I'm going to watch for a potential double bottom setup. If not, the only thing it's really tough, besides there might be a scalpy buy in here if we can get it back above 57. Very scalpy for a target at 58. Other than that, going to be watching for a stronger bottoming pattern. Natty gas did not trigger the %B buy yesterday, so it was no hold, even though it's a gap up, did not officially trigger. So going to be looking now for another rollover play and a stronger bottoming pattern. Gold, not much to talk about so far. Sideways correction with the rising 8 EMA, looking for the next breakout, which would be 44.60. There's nothing topping yet there. Silver continued higher, just shy of the next 68 target. Key support now back at 64.50 to 65. Dollar index, return to rotation zone. Remember, we hit the first, second targets on the double top. Going to be watching now for a rotation back down to see if we hold the lows from Tuesday. Technically, the %B buy triggered yesterday, and we smack dabbed into the rotation zone. So when something happens like this and it hits a key level, again, my key level, rotation zone to 98.21, it's a very light hold going into close because it's unwinding stuff during the day on any market, not just because the first area of resistance is the rotation zone, and then you generally get the stronger bottoming pattern. But a little can be held still from my perspective. Euro, again, pausing after hitting the first and second targets, pausing with the rotation zone. Still going to be looking for potential. That's why I'm looking for more dollar pullback, because we could push another push higher still in the euro to possibly make a stronger topping pattern. The good old Bitcoin bouncing on the let's go full risk on today into the open. This is another one that's been getting selling pressure constantly still. So Bitcoin's got to sustain back above 89,300. before I'm interested for anything scalpy. I'm still not so sure about this. I think we still might get some selling pressure, but we'll see. Youngest Nate. Oh, thank you. Thank you, Ted. Clarifies it for me. As opposed to the oldest Nate. That's the youngest Nate tuning in from the Netherlands. That's why you guys are the best. You guys are the best. Helping me out. Did not decipher that one. All right, the Spidey sense. Again, your gap up today. Let me clear some of this up. Let me clean some of this up just so we can see it better. The key target area, I'm looking at 678 roughly on the first level of the rally. If we continue beyond that, we're looking around 680 to 680.22. Above that, for a continued rally, 682.48. I'm not expecting that kind of rally today, but that's if it does continue through tomorrow. That's what we're looking at. If we were turn around, yesterday did close below the 50 EMA. We're now back above it. We have the first cross, nearly the first cross of the rotation zone. So this has some heavy lifting to do. That's why I'm really focused on any continued rally is 682.48. But if we sell off again, 673.50 area, and then yesterday's lows and to the gap fill. If we took out there 670.05, then the major line in the sand is 665.25. The Qs, at least on this bounce, and this isn't even to new highs. This is to retrace this last rally. Key, I'm watching yesterday's open on any continued rally, 613.06 to 613.50. First key line resistance. Then we have 614.75. And to shift the probabilities in the short term, we have 618.36 on any sustained rally. The Q is still also closing above the 62.5 yesterday, so did not shift the probabilities lower. You want me to look at the dollar-yen pair? The dollar-yen. Not much reaction off this. I mean, we're this, by the way, this is not a double bottom because it's not reversing enough of a move. What I am looking at in the yen, in case you're wondering, is a resumption above this trend line, or if you want to draw your pullback channeling move, which is the same trend line, this is roughly your channel is pulling back after the move. And if you look at this to get context on your weekly, return to the weekly rotation zone with cycles still heading down, getting out of overbought condition. But this is so far pretty much a sideways correction on a weekly basis and just a channeling pullback on the daily basis. Can we look at the 10-year yields? Already did. We can look at them again for you, Jake. We can do that for you. We have the potential mini double top pattern on the daily basis. So we need a close below 411.4. Just remember 411. Okay. Does that invalidate the massive head and shoulders double bottom? Well, let's see if it would. If it went to all the targets, because we don't have a stop raise yet, if it went to all the targets and closed below 4.03, it would invalidate. Other than that, no. And it hasn't even triggered or confirmed yet. So that's the one I'm keeping a close watch on today and tomorrow. What else do we have? Tesla. We had the reversal yesterday, but now the gap up today. Again, we completed the double. We're getting to major divergence patterns up here. Cycle still looking like a top, but there's no fantastic short signal just yet. Coin has a daily potential double bottom. Thank you for putting that in there, Sterling. Here's your coin. There we go. Let me just update that. Now, on the bigger thing, Coinbase has shifted the probabilities that we could see lower prices. Would this bounce? I wonder if it would, if we trigger this double bottom, which we don't have. Let's see, because here's what I'm looking at. Let me just recolor some of these real quick. So we are in potential double bottom territory against. This would be again above the 50, but it would be still separation of the rotation zone. So what does that tell us? Slightly lower probability. Even with the full aggressive targets, it would not shift probabilities the other way yet. So this could easily bounce, and you could still not shift probabilities for higher price action. We still have the technical magnet price action and a potential reconnection with the 200. So does that mean it's not tradable? No. But it's an aggressive setup that you have to monitor closely should coin actually trigger it. Does that would not turn into a long-term hold for me? It would just be a scalpy short term, not short trade setup, but a short term long. Jake wants Jake asking for a lot of stuff this morning. Uranium still playing out. We hit the first target on the double. This is why I'm being very patient for uranium. We hit the first target, we bounced. The bounce did not invalidate the other targets. It would have had to, didn't even get to the 50% harmonic. Okay, it would have to now get above 5280 to invalidate the remaining targets. Or what am I looking for? If we come back down here, little gap up today, but if we come back down here, I'm doing the longer term because uranium's a long term for me. Anything I'm looking at uranium, I don't look to day trade this at all. Would not be really surprised to see it reconnect with the 200 also, or at least retest these low areas. But why am I sticking with the weekly chart? Because if we come back down here, and hold the first target and dip below 42.35, I know we're gapping up this morning because boy, we got the buy all the AI stuff today. So, well, of course, we got to buy uranium. You got to power it somehow. But I'll be looking if we get into potential double bottom territory for this to potentially trigger. Now, if it did get there, this isn't exact yet. With the other targets, it would still be valid unless it would still be valid unless it gets all the way back down there. So that's what I'm keeping an eye on. Other than that, I'm not personally not rushing into uranium. Not surprised to see us get to oversold with some bounce play, but we still have longer term pressure downwards. Hope that makes sense. All right. Uranium did make the news. Uranium's been making a lot of news recently. ITA cleared the 205 mark. We tested it yesterday. What do you think about it here? ITA. We had the sloppy. Let's see if it invalidated anything. Again, coming up 62.5 with no close above it. Did not invalidate the very sloppy head and shoulders pattern. Still. Did not invalidate it. So. We still have, unless this gets invalidated, it's still, you can see downward pressure on this. That's why 211.39 would be key for me. Otherwise, this is just a bounce play. It entered the 50 to 62.5. Did not close above the 62.5. Did not even really get above the 62.5. And now rolling back down. So I got to go with the odds. All right. Let's just peek at the S&P and NASDAQ going into the open. Remember, I'm going to be looking to see if we get any selling pressure. We're coming up to very key resistance areas. So if you've gotten long here, at least look to raise a stop up here. The NASDAQ closing above the prior breakdown level. Still into the clear path move. Remember, the next key area is 25,390 area. And then you have the 50%. It should have just go on a tear today. The 50% and the end of the clear path move. Nothing's changed with that. But on any pullback, watch 25,200 for key support. That's where we sit. I'm all done for today. I'll see you guys tomorrow morning. Bye for now.